Companies didn't shy away, though, from big M&A deals in the run-up to Tuesday's elections. More than $290 billion in M&A transactions were announced in the 5 weeks before the vote, making this year the third busiest election season since the millennium. So joining us now is Robert Profusek, Jones Day Global Chair of M&A, and Ed Hammond, a Bloomberg Senior Deals Reporter. Guys, thanks so much for joining me. So, Bob, new House Democrats, what's going to change for the M&A world?
Not much, really.
Okay.
I don't think the congressional election means a whole lot. It could have some indirect consequences and very large transactions which attract political attention, whether or not, regardless of who's in power. Then that could have a marginal effect. Think of the AOL deal recently, that sort of thing. But, you know, the fundamental drivers of M&A, and the reason it's been on such a tear the last 5 or 6 years, are globalization, technology, and kind of fueled. It's not accelerated, really, by the incredibly low capital costs we've had. But it's globalization and technology. That's not changing. So, you know, some of the biggest transactions, will there be some pushback and some politics? Sure. Remember candidate Trump. Remember?
Oh, yeah, we all,
but
yeah. Antitrust was going to be on.
Promised to block Time Warner AT&T, right?
That's right.
So,
failed so far. Just picking up on that quickly, though, Bob,
yeah.
a big issue under Trump has been national security and this sort of much more hawkish view of any deal that involves potentially a Chinese player. Is that going to ramp up now with this? Because it does seem to be bipartisan support for that kind of push.
Well, that's a strong collateral headwind, let's call it. And it's not just the U.S. One of the things that's for a guy in the trenches like me, that it's pretty remarkable how much nationalism is involved in M&A. There always used to be going into a particular country that was an emerging country and all the rest of that, there's some protectionism, but there's a lot of it. You know, there's just slightly fewer than 200 countries in the world. There are 120 now pre-merger clearance mechanisms. Wow. 120.
Wow.
So a big deal. You can have 30, 45, and very often you see countries who are not critical, but taking a bite out of the deal for their own interest, including, but by no means limited, the United States.
You basically it's two issues that you guys are hitting on. Like, one is CFIUS and one's antitrust, and sort of how that's going to change or not going forward. So, Ed, if you take a look at some of the movement we might see, more investigations into technology, more pressure on big tech, maybe something on infrastructure, like, where is the opportunity? What sectors can see more action?
Well, I think mergers, particularly where you're merging within a single geography, are going to continue to happen. And actually, interesting, we saw both the IBM Red Hat deal and just yesterday the Comscore Aris deal. They both, or all four companies, we should say, came out on the front foot and said, we're not going to need Chinese approval for this deal. So I think people are going to be more focused on deals where you don't have a ton of cross-border stuff happening. I think in terms of sector, look, it's a very broad church, what is and isn't considered critical infrastructure. Obviously, anything with technology, anything, as you say, in sort of hard fixed asset infrastructure, oil and gas, food supply. But it's going to be interesting to see whether or not certain deals that people don't expect to fall into this now do fall into this. And as I say, the Democrats are by no means less hawkish on this issue than the Republicans. And you just saw Hank Paulson actually on Bloomberg just 2 days ago talking about this sort of potentially long winter between China-US relations, the falling of the economic Iron Curtain again. So I think, look, people are being much, much more cautious about any deal where there's a cross-border or critical infrastructure.
Sure. I mean, economic Iron Curtain, that's no joke. And we actually talked to Ralph Schlosstein of Evercore president and CEO and talked about sort of what companies are looking at when it comes to uncertainty. Here's what he had to say.
Uncertainty is the enemy of M&A activity. There's a huge amount of uncertainty as to how both Chinese regulators and U.S. through the CFIUS process will react to larger cross-border M&A transactions.
So, Bob, where's the sure thing? Like, where's the easy road? Like, where's the easy antitrust road where you can ignore CFIUS?
Well, I really think it's less antitrust, and I think you're exactly right. Domestic things, or where it's mostly domestic or single country or EU, US, although...
Even that's getting maybe a little
bit... But the EU's getting much tougher on it as well.
Goes up. That's right. But people aren't going to shy away from this because of these problems. They're going to recognize that they got to overcome them. But again, I go back to where I started. technology and globalization, that's what's driving the bus. That's not changing. In fact, if anything, it's going to continue to accelerate, meaning companies who just stand still and count on their asset base, you can argue they're going out of business day by day.
But then does that mean we're going to see sort of smaller deals, sort of add-ons, et cetera, or does it have to be the big guys?
I think we are seeing more of those kind of what they call bolt-on acquisitions for sure. That said, there is still appetite in the market for the kind of big game-changing transactions. We saw that with IBM, by far the biggest deal they've ever done. And the interesting thing is shareholders earlier in the cycle were rewarding the companies going out and doing those deals. You saw a rare thing of a bump in the share price of the acquirer. That seems to have caught off. Whether or not that tempers demand for some of these big, as I say, game-changing transactions will remain to be seen, but it's. I think you will see both, but certainly the ones at the lower end of the risk spectrum, I think, are going to drive the cycle down.
Yeah, I was going to say, let's talk about energy companies not getting rewarded for announcing acquisitions. So, Bob, last word to you. Then, what is the biggest uncertainty for companies and CEOs to prevent them from pulling the trigger?
Well, I think the biggest uncertainty is just volatility. And that's one thing that the congressional change may impact. If we have government shutdowns or we have, guys bringing out their guns at high noon to brinksmanship on the budget and that sort of stuff. Volatility is bad. I mean, the third quarter was a big fall off. Now that was whatever, but October was really bad because of the volatility. So if politics, just produces all sorts of bad stuff in the marketplace, that could have an effect.